other than What's Going On with Lady D and Sir John, the Anomaly.
Oh, wow.
Oh, my. Well, we're excited as always. It's a beautiful Sunday afternoon. A little chilly, but sunny. Take it away, Lady D.
Well, it's a wonderful, and you're right. It is so beautiful and so sunny out. I'm just loving it. We've been so lucky to have all these wonderful sunny Sundays in Cleveland.
Yeah.
Absolutely.
How about that?
Absolutely. It's gorgeous.
Yeah. And eventually we're going to get some warm weather coming.
Yes.
You know,
yes.
It is April.
Yes.
I'm pretty satisfied with just today after all the gloomy.
Yeah.
Finally, sun.
Sunshine. Ain't nothing like some sunshine.
Oh, yes.
No.
Well, you know what, guys? I know we got the tax man coming.
Yes,
he's
he
running.
just sent me a little message. He's en route. He's should be
en
here
route.
shortly.
He's en route.
Right.
Well,
You know.
until the tax man gets here, let's talk about
Life?
What, like life in general?
Well, we could talk about politics.
Oh, yes.
Could talk about spring cleaning, which I've been doing.
Spring cleaning. What is the tradition behind spring cleaning? Anyway?
Get rid of the old that you don't need no more. All the clutter, so you don't become a pack rat and be on one of those shows.
You say what? You
You'll
say
be
what?
on one of them shows.
So you
know,
won't
where
become a
people be
pack
having
rat and you be
stuff
on one of
up to
those
the
shows.
ceiling.
So you won't be on that. So, that's what spring cleaning about.
And you know what? I'm telling you, it's amazing how you will find, some people do, stuff, just mail.
Right.
Yeah.
You know, you get so much junk mail, you get stuff in the mail and it accumulates and, you put it over here and you're going to go through it and then you never get through it and now you got stacks and stacks and it becomes the same thing with everything else.
Yeah.
And
It becomes clutter. And
Yeah.
one thing Lois taught me, too, about spring cleaning is that, you're getting rid of the stuff you're not going to be used.
Right.
But it's also a way of safeguarding your home from rodents or insect, things like that.
Things that harbor, those little
Right.
ticks and
Things like that.
bugs.
So,
Yeah. Mm-hmm.
so that's a good way of keeping them out of your home.
Well, you know what? I learned this when I was raised. You guys may not know this about me, but I was raised Jewish. So you didn't know that, did you?
I did not know.
You didn't. Yes. I was raised Jewish.
Okay, do you keep
And-
the kosher kitchen?
I said I was
Oh.
Raised
Jewish.
Okay.
All right. Put some pork in front of me now.
Okay.
I'm
It's
gonna eat it
over.
up.
Okay.
All right. So anyway, here's what happened. Every time around this year, as a matter of fact, during Passover, during the days of unleavened bread,
Okay.
we were required to unleaven our homes,
Our lives.
our cars, and it's supposed to be our lives, but hey, I just knew I had to clean my room and get all the crumbs that were, laying around out, all the crumbs laying in my car out. And my dad was a sticker on it. That's how we knew about spring cleaning, because we knew that we had to have everything prepared before the first day of unleavened bread, unleaven our house.
Wow.
So that's how I came about spring cleaning. Ask me if I do spring cleaning today.
Right.
Obviously not. Look at the studio.
That's pretty sure.
Yeah, I don't see things. I mean, probably where you're sitting at.
Oh, yeah, it's
dysfunctional, but
Yeah.
you know how to work it.
Right, I know how to work
Okay.
it. Right,
As
I got
long as
everything
we
hidden
got
back
this
here.
You're right.
Up there, you guys
We
are
looking
fine.
good. Okay.
Yeah.
No,
Right.
no stuff out of place.
Right.
But you know what? When we were growing up, I guess spring cleaning was every day. Okay, because
Now, that's not fun.
Well, that was the rule and the order that we followed at all.
Right.
We cleaned. As little kids, we had a housekeeper.
But spring cleaning is supposed to be deep cleaning.
Well,
Right.
we deep cleaned every day, so therefore I don't know about no spring cleaning because it was something we did every day. You got up every day, you made your bed before you came out that
That's
bedroom.
usual cleaning.
No.
Deep cleaning is y'all was every day at the baseboard scrubbing them.
That's right.
Every day.
Not,
Every room.
Not as kids, no, because we had the maid, the housekeeper, that was her job to do that kind of deep cleaning, and kept things in order. But we maintained everything, and we would get outside the house And when we
See,
cleaned the
that's
yard,
what everybody.
we
That's
cut
not spring
grass,
cleaning.
we washed the house down with the hose.
That's maintaining. That's not spring cleaning.
Well, what's the difference? I mean,
The difference is a deep clean.
Well, we
That
deep
means
clean.
the nicks and the crannies,
Oh, no.
baseboards,
That stuff
the
is already
ceiling. So
Yeah.
y'all didn't do spring cleaning.
No, we didn't do spring cleaning because
Somebody
we
else
that
did
every
it.
day. No, it wasn't about somebody. Well, yeah, we did have somebody.
Yeah,
else.
who was being paid to do it?
Okay, well, just moving right on along. All right, we ain't gonna worry about that. Well, looks like our tax man is here.
She got saved. Saved her.
Yeah,
Saved by
because
the
we're
bell.
here talking about spring
'Cause I was gonna get on her.
cleaning, you know.
Like, that ain't cleaning. Spring cleaning
But
is
you'd be
deep cleaning.
surprised how much stuff people hold on to.
Yes, and we're doing our coverage and we're finding stuff that, 3 or 4 years maybe.
Yeah.
I'm like, wow, I forgot all about that.
Hey, do me a favor, my buddy. Pull that microphone up to
And you know
to
something else I find is
Sure.
good to do? Is
Like, I
going
forgot
through
I
the
used to make
closet
my
and
own
getting rid
cigarettes.
of clothes that you no longer going to wear.
That's all the machine.
Because we
Right.
have a tendency of holding on to something that's going to motivate you to. That was my favorite. I'm going to get back down to it, get back in that size, and that never happens. But it's still hanging there.
Right,
Yeah.
right.
Taking up
I need to
space.
do that.
And that's
really
something
do
I got to
that.
get in
Yeah.
my closets and start
yeah.
getting.
Or your
rid of.
favorite pair of pants, they're over 20 years old.
Yeah, and I probably need to, get rid of a lot of shoes too, because I'm such a shoe fanatic. I have even found when I started going through the shoes,
Yeah.
oh, here's two
Hey, John,
here.
do
I
me a
liked
favor.
them so much.
Move
I
over a
wound
little
up
bit more
buying
that
the
way so we can see
same
the
one.
tax man.
You know,
All right.
And bring the mic with you. There you go. And
There we
bring
go.
There you go. We need to see the tax man because he's the man
yes,
with the plan.
yes.
What, we got, 2 more weeks or 1 week left?
No, like 7 days,
Well, actually, it's next Tuesday, the 17th, so 9 days.
9 days.
9 days.
Okay.
Nine days left. Well,
Not this Tuesday coming, the Tuesday after this.
Well, welcome to the show, Mr. Oliver. James Oliver is in the house.
yes.
We told you he would be here. No, he's just booked. And they just they're really working, my guy.
Yes.
You know, he had to actually sneak out and come to an event last week. That was really great. We was over at Kirby House last week together.
wow.
Yes, yes.
And it was wonderful. PNC, they sponsored the event for PNC Fairfax.
Right.
And
Awesome.
I thought it was just really awesome that we have this facility in their neighborhood. And
Take advantage.
and
Oh,
the people there in the
absolutely.
neighborhood took advantage. They had a bus that actually took them over to the Playhouse and brought them back, and we had a little reception with the nice little appetizers.
Oh.
It was just wonderful.
VIP?
And not to mention the play.
You felt like a VIP.
The play was really good too, wasn't
Excellent. It was excellent.
it? Yeah. So you
Good
get a
acting,
chance,
good
get
people,
out,
yes.
get a chance to go and see that play. It was the name of it was Black Girl Finding God. I may have it. It's in that fashion.
Right. Or
Okay.
looking,
Okay.
asking questions. or-
Yes, she wanted to find God,
Right.
and it is really a good play to see.
Yeah.
So, further to ado, let's get on with some real business. All right, so we're down to the end of these last prepares, running around trying to get stuff together.
Right.
What is it that people should be doing throughout the year so they're not caught up in the last day trying to get stuff done?
Well, if you're in business for yourself or if you have any receipts, the best thing is to do this on a monthly basis. You collect your receipts, organize them, calculate what their sums are, and then put that away. And if you do that on a monthly basis, you don't have to wait until the end of the year. Like I had a client last night who's up to 3 o'clock this morning, is tired because she's trying to put all this stuff together with her
Right.
rental property. And I said to her, you should have done this just a little bit sooner. You would be. So that's one of the things
Right.
that happens.
Right.
That people do not wait till the last minute. And needless to say, for me personally, it's hard for me to remember what I did last month, more or less to remember what I did 12 months ago.
Exactly.
And so you need to record that stuff down. You need to calculate it. You need to put it away. And you do it on a monthly basis. It's really very easy to do that.
So to be well organized.
Exactly. Exactly.
Well, I want to say something. I want to thank you.
Okay.
I want to thank you. I want to thank you because I finally got all my books in order. I won't say books. I'll say book
Okay.
in order. And it feels so good. It feels so good to know where I'm at
Mm-hmm.
and how I can map my path to where I want to go.
Outstanding.
I got the QuickBook Intuit thing,
okay.
Okay.
hooked it up to my PNC bank account,
Okay.
put all my vendors on there, put all my 1099 people on there, and I put, you know, income expenses and everything on there. It was great. It shows me what we're making.
Right.
It shows me what we're spending.
Right.
You know, where I'm putting the money, and I can't wait to do my taxes on this stuff next year.
Okay.
I'm looking forward to it.
Okay. Well, that's a
Brilliant.
great
Wow.
position to be in, to know where you are. A lot of times people really don't know, you know, small business people, they're so busy hustling that they have no idea where they're. And that's kind of one reason why people hire accountants, so that you will know, hey, when is your good season? When is your bad season? Are you cost of goods sold too high? You know, you don't wait a whole year to find that you were spending too much money on certain things that you could have saved money on. And so that's why you want to do those things on a monthly basis. And I said, if your business is big enough, hire an accountant. He will more than pay the savings that you get from that. One thing I do want to say, like a little slight news flash.
Yes.
The last time I was here, there was a couple little small changes that happened on February 9th of this year. The 45-minute administration said, you know, there's a lot of things we took out for 17 and 18. And so we did not mean to take out a couple of things, and we want to put them back. For an example, private mortgage insurance, which in the beginning of the year was not deductible. Windows, doors, things that you buy for your house for energy, that was not deductible at the beginning of the year.
Right.
And so on February 9th, they decided to do what's called a corrections. And so they said, you know, we need to put that back in for 17, and we didn't mean to take that out. And so they called IRS or touch base with IRS, and IRS says, you know, guys, this is the middle of the season. You know, we just can't instantly do this. Give us just a little bit of time, a couple weeks, so we can reprogram our system so that we can have that now established in our programs. And so for those who filed taxes between, say, January 15th to maybe end of February, and was not able to take the private mortgage insurance, or if they bought windows
Can they
and doors,
now?
they can now, but now they have to do an amended return.
Okay.
Okay.
So there could be other technical corrections coming along the line, but that was one, like I said, in the middle of the season.
Wow.
And so just in case if people filed their taxes already and had spent quite a bit of money on windows or doors or a combination of the two and did not take that energy credit, it's now available.
That's going to be a
What was
big
this-
help for
yeah.
people that were in bad weather, or, you know, where they were having the hurricanes.
Which
and,
they are still rebuilding.
yeah,
Right.
yeah.
Right. And so I just wanted to kind of put that out just for those who maybe did not know that that they took that back and recanted, and now it's now back in our.
So go, you know, if you need to, do
Right.
that amended return.
So yeah, you might need to look to see, okay, is it really worth me doing the amended return? Because of course, at the amended return, sometimes they look a little closer now. They ask for a little more information. In fact, I had a client who, when they got their taxes done, forgot to give me their students, their what's called a 1098 tuition. They paid tuition for and their son was a first year freshman, and so, and she was kind of in a rush to get it done. And I said, "You sure you got all information?" James, I got all information. I've been waiting to get this thing done. I got everything. So this form comes in, like maybe, in fact, she's got her refund already.
Oh, wow.
Right.
Okay.
And so now she wants to do an amended return because that's a significant amount of money. She really had no idea how much money, because she said, "Will that change my return?" I said, "Substantially."
Wow.
And so we did the return. We sent it in, and because they now look at it a little closer, they said they didn't send it back. They said, "Hey, we need a little more information," because normally you don't have to send in the 1098T tuition form, because you just say this is what it is. You put the form, send it in. But now because it's amended, they want to take a look at that form and say, "Why don't you just send it in?" Now, granted, if they did their research, because they get a copy of it too,
Okay.
but they don't want to go through that trouble. They like the taxpayer work a little harder to get that information in. So you have to kind of weigh that. Is it really worth that extra effort to get the money back? Now, if it's a couple $1,000s in a heartbeat, but if only
Yes.
maybe $20, $30, I may not do it.
Right.
So what was the other thing? You said there was two things, or was it just one?
Well, the private mortgage insurance was one, and then the energy credit.
Credit, so
Right.
both.
Right. So that's the second thing. So those things that I said, just in case. The other thing is this.
Did the first one include home equities?
Home equity loans was always deductible for the whole year, so that hadn't changed.
Okay.
Yeah. So if your first mortgage, second mortgage, home equity loans, was always deductible for the whole year. So now what will change for 2018 is that when you look at the Schedule A, for those who do Schedule A's, because if you look at the Schedule A, it's divided in several sections. The very top part is medical.
Right.
The next part is taxes. The next part is interest, like mortgage interest. The next part is charity, and the last part is miscellaneous. Well, the last part, the miscellaneous, gone, unless they do a technical correction. So those who want to do, professional dues, those who want to do reimbursement for mileage, those who have travel that expenses that employees take that their employers did not reimburse them, that part's gone. So at this point, unless we have a technical correction. Now you go back up to the tax part. When you add up all your taxes, they cannot exceed more than $10,000. Anything over $10,000 will no longer be deductible, which is why some people kind of made this mad rush to the county to pay their property taxes. Say, for an example, if you live in Shaker, where property taxes are extremely high, and let's say you have a house that's $6,000 a year, you're paying property taxes. Well, let's say you're an earner that you earn over $6,000. Six figures. Let's say $100,000. Well, just the withholdings from your state taxes and your city taxes plus your property taxes is going to go over that $10,000 mark. And so what people were doing was to pay their property taxes early so that now they can still stay under the $10,000. So unless that changes, then that $10,000, which is why, for an example, if you're in California,
New York,
where you have those big properties,
Right.
One property alone could be $10,000, just the house itself. But, and so, in fact, California was really very upset with that. They were trying to change and make that something else in terms of for a
write-off.
Yeah, for a write-off. So they wanted to kind of change that for the
just-
constituency. They were thinking about how can our
still get a deduction or
right in another way. And so, do we make it a charitable contribution? Do we make it because charity contributions are still the same? And so they were trying to float some ideas out there. Now, what if they come up with something? I don't know, but that's just something that they need to consider.
Yeah, they're working on.
Right. So, a couple other things I'd like to just talk about real quickly, because since the 17th, and it is the 17th, for people, next Sunday is April 15th, and normally April 15th is the deadline.
Right.
But because April 15th falls on a Sunday, the normal thing is it rolls over to the next business day. And the next business day would be Monday. However, in D.C., they have this special holiday. And because that special holiday closes down most of the things in D.C., including the IRS, the main office of the IRS says, well, we don't want to be closed on that day, so we're going to roll it over to Tuesday. So that's why this year is Tuesday.
Get an extra 2 days.
Extra 2 days. Now next year it'll be back on Monday, April 15th. So you won't get that extra 2 days. But in that saying that, for those who I get these questions a lot, can I file an extension if I know I owe money? And the extension, the answer is absolutely no.
What?
No.
I can't.
Women.
Not if you owe.
Not if I owe.
If
Wait.
you owe money, you can't file for an extension?
Well, let me say it this way. You can
Okay.
file for an extension.
Yes.
Okay, with the forms, but you cannot file an extension to pay your money. IRS says that if you know you owe money, at the time you file an extension, you're
Right.
supposed to pay the money that you owe
With.
with your extension.
But you can get on a payment plan.
You can't get on a payment plan.
Okay.
Okay, but there are some people who feel that if they just file the extension, it also extends the time for them to pay, and that is just not true. So make that real clear that if you know you owe money,
Right.
send some money in with your extension. And so let's say that so that extension only gives you time to file your
The
return,
document.
the documents, but not the money. Now, if you also know that you want a payment plan, then you send in for what's called a installment plan,
Right.
and to ask at that point in time.
Right. Okay.
So, but yes, can anybody file for an extension? Yes, you can file for an extension, but just know that the extension is just for the forms and not for monies that are due.
And there's no charge for doing the extension.
No, not at all.
My question is, every time they do a tax overhaul, they never have tax experts doing it.
Well, you have to remember, we have our politicians in D.C. who...
I mean, you guys would know how to make our tax plan more simple.
Correct. But they don't get our advice. They don't talk to us. I guess they don't feel. So what we have to do like what I will be doing, one of the things after tax season is start to pour over the new tax laws to find out what's there, what's not there, and how I can help my clients navigate around the new tax laws. So that's one of the things that we'll probably, as a community, will be doing, is to kind of look at this a little closer, because since 90% of the tax laws that were changed in end of December really affects 2018.
Correct.
As opposed to 2017. I said there were a few things that did, and they obviously recanted on a couple of them, but most of the changes, like say for an example, exemptions. There will be no longer exemptions. So if you had 10 kids that you're filing on your return, you won't be able to file any of them anymore because they've eliminated that. So once again, and I say that today being April 8th. Now, of course, they may have a change of heart. They may say, hey, we didn't really mean to do that. We were thinking,
Do a correction.
Right, so we will do another technical correction to correct it. Maybe we'll allow that to happen. Now, here's the thing that's going to be very interesting in that even though the exemptions are gone, and at this point, let's assume that they are, one of the things they've done is to try to twist payroll departments across the country to scale back people's exemptions because they've changed the rates. And so normally when someone fills out a W-4 form, it's normally based on the number of exemptions. If I'm a husband, I got three, and my wife and my 3 kids, then I would put, on my W-4 form, 5, one for me, for everybody. But now since that's gone, what do you now base it on? And so there's a problem in terms of filling out a new W-4 form because of the new tax laws. And so that's...
Yeah, because you don't need that anymore.
You don't need that.
It's not...
But you still have to file taxes. You still have to consider...
Yeah. So, you still have to file taxes, but that's no longer part of the tax.
Well, it's no longer part of the tax in terms of what it used to be, but you still have the amount, or still have to consider your exemption. Let's say, here's the thing.
They put you at a certain tax level.
Right, because here's the thing. If you're breaking even right now, or owing a little bit of money, and then your employer is scaling back your withholdings, which means you now get more in your paycheck,
Right.
well, you're now going to be in a worse off situation next year. So what I would employ you to do is to talk to your employer to say, hey, I don't want you to take more money out of my paycheck because I'm already breaking even paying money now. And so I need you to go back to what it was before. So you need to be careful of that. And a lot of times, because we have a lot of people, especially our millennials, or some of these jobs, they do what's called direct deposit. They don't even notice it because the money is directly deposited in their account.
Right.
And they won't notice it until in a year. And I would say that time is a little too late.
Yeah, but don't they normally give you a check stub?
They give you check stub, but it's
Well,
not the
not
same.
anymore. A lot of
So
times
it's
they're...
all online.
computers.
You just go right into your job
And you can change your W-4.
anytime you want to throughout the year,
Right.
periods.
Yeah.
Right.
Yeah.
So because it's online, a lot of times people don't even look. They just look what's in their account. That's there. I got paid. Okay. So, and they don't even look at their exemption, what's taken out at all. And so my suggestion is that, yes, you need to go online, look at that pay stub, print it out. Is it going to help you or hurt you with this new amount that's being added to your... it's great to have extra money in your paycheck, but, the IRS is a pay me now, pay me later system. And so you get the extra money now, you're going to owe them later on.
Right.
And so that's something that you don't want to put yourself in a position in, where I'd rather break even and get back a little bit of money than to pay. This is something in me, I just don't want to pay the government. If it's even
But they're taking their
$500.
taxes out of your check anyway. That's the part I never understood, to be honest with you.
Well, see, here's the thing. Remember, the tax system, well, we all know it's not a fair system. Let me start that off. But it is a system where they collect taxes for, obviously, our armed services, we pay 45, so there's reasons why they have the money taken out in the first place. But remember, when your money's taken out, whether it be your pay stub or your pension stub, that money is not technically the government's. It's put in escrow. It's actually theirs when you do your tax return. So I'm not sure if you know that. Yeah,
I didn't have that.
Yeah, it's put in an escrow account with your name on it and say, okay, and for this amount of money is in this escrow account, and that's why they want you to do your taxes, because when you do your taxes, now you know exactly what your tax liability is for the year, and if you have more money than your liability, or if your liability is less than what's put in their escrow account, you get a refund. if what you owe taxes is less or more than what you have put away in your escrow, now you owe money. But that money is not theirs until you file your taxes.
Now I got a question. For
Yes,
you.
sir.
And I don't
That
know
is something I didn't know.
I didn't either.
I don't know how true this is.
And
Okay.
let me throw this out here real quick before you
Go
get your
ahead,
question. This is really getting good. So if you're listening, if you have any questions, feel free to call us at 216-298-1554.
Or even go on Facebook
Or
and
go
put
on
your questions.
Facebook and submit
Twitter.
your questions, okay? Thank you. Go, Larry.
Okay, I saw something on YouTube once
Okay.
where this guy was telling everybody that your social security number is connected to this account, sort of like you're talking, this escrow account, and that it's just like having a credit card. And if you put your social security number into some sort of credit card purchasing, they'll give you the money. I don't know what it was, but it was sitting on what you're saying. It was like your social security
It's
number.
your escrow account
It's like you're right. It's your bank account. It's your account,
Right.
from your taxes.
and that there's money in that account,
But the only
and that you
way
can withdraw that money out of that account.
no,
No? Okay.
no. That's because the only way you really can withdraw that money legally. Now, I mean, there might
It's
be
a-
other
it's a tax.
other
Right,
ways to
right,
get it out,
right.
but the only way is to file your taxes, and of course that's only once a year that you do that, unless you're filing them in a return, and so that money that's put away. Legally, the way you get it out is by filing your taxes, because now because they're putting that money, and technically you can't get to it, they can't get to it. It's supposed to be in this unbiased place, so to speak.
Well, I don't think so.
Well, see, for those who do not file their taxes, what the IRS does, and they know that some of that money is theirs, then IRS will, well, not so much take it. No,
Subpoena it?
no. What they'll do is, first of all, they're supposed to notify you and say, hey, you have not filed your taxes for this number of years. Please file your taxes. Now, if they send you a certain number of notices and you still don't file your taxes, what they can do is file a tax return for you.
Okay.
And so yes, and so what happens is now, and they'll file it in the very worst way. Let's say if you got mortgage interest and a bunch of kids, and you're married, they will file you married filing separate, with no children, so that you have the highest tax rate possible. And then once that's filed, they take that money and whatever still due you, they start sending you letters. And so
So therefore, in other words, they'll file you, but they're not going to do it in your best interest.
that's correct. But now, if they file your taxes and for some reason or another you're supposed to get a refund, they won't file it.
Really? It's
Really.
only if you owe them.
That's correct. And when they figure out, if they do 4 different ways and try to figure out get some money from you, and you still get a refund, they will not file that return. They'll wait 3 years and then may try to do it because after 3 years you're not entitled to a refund. And so, but they will not file that return for those first couple years if they absolutely know that you got a refund. But
Wow.
but the reverse is just the opposite. If they know you owe a large sum of money, they will start pushing you after that first year, because they know that there's some of this money. They said, well, unless he has a whole lot of deductions that we don't know about, we want this money. So
Wow. That is so interesting. My goodness. You have a book out that our listeners need to know about. Let's get that book over here so they can see.
That was some interesting information.
Yes, it was.
I didn't know all about that escrow.
James
thing.
Oliver has a
Had
book
no
out that he
idea
brought
about
out
that.
last year. A dozen expensive tax mistakes
Interesting.
that cost business owners thousands. So, tell them how they can get your book.
okay, one way they can get the book is the best way is probably is to call me, and my number is 216-491-9350. That's 216-491-9350. One of the things I'd like to discuss
Okay.
with this book, especially for those who are entrepreneurs. In fact, I just was talking to someone this morning in church who has their own business, and they happen to file tax with somebody else. After talking with me, they want to file with me next year.
Mm-hmm.
But because of the fact they're in business for themselves and they owe a whole bunch of money, I said, well, didn't your accountant tell you about estimating taxes? He said he didn't say anything about that. He just said, this is what I owe. After I gave him all my, expenses and my income, my income sheet, and didn't tell me anything about that. And so what I suggest to people, in fact, it's the first chapter, and I can't even emphasize it enough. It talks about well, actually, the second chapter, the first chapter talks about planning. The second chapter talks about 4 bank accounts. And so what people don't do is that they do not plan, one, and then two, pay estimated taxes on the income that they make as a self-employed person. For some
quarter.
magical reason, they understand as an employee, if I make $1,000 a week, I don't take home $1,000 a week because they take taxes out. They take my federal taxes out. They take my Social Security out. They take my Medicare out. They take the state taxes. But somehow, when you're self-employed, all of a sudden now we've forgotten that $1,000 is still not yours. Okay, that part of it belongs to the government, and there's estimated times that you pay. And ironically, the first estimate, because it's done on a quarterly basis, even though the government can't count quarters correctly. What I mean by that is because the first payment is due April 15th. The next payment is due June 15th. Okay, and so if you count the number of months between June and April, it's only 2 months, but why they call that a quarter, I have no idea. Then the third payment is September 15th, and then the last quarter is January 15th. And so, and the best way to do this and to calculate this is that, let's say for an example, you make $1,000, okay, and if you spend money for your business, buying supplies, all right, use the debit card, use the check, and that way you keep track of that.
Have a trail.
Have a trail, okay, and all your money goes into your business checking account. That way you kind of keep track of that. You keep track of your income coming in, expenses going out. Now, let's say when you want to pay yourself, when you want to take money out to go out to eat, you want to take money out to pay the rent, you want to take money out to get your hair done. Well, that's like paying yourself. And so when you take that money out, if you take $500 out, you cannot keep the whole $500. You take maybe 35% of that money of the $500, and now you put the 35% in for Social Security, 15% for that, another 15% for federal taxes, another 3% for state taxes, another 2% for city taxes. And once again, that's just an estimate, but if you put that way in your business savings account and don't touch that money, because that money there, that's your tax money, that's your escrow money, so you can put away and give it to the respective
At the end of the year when you
not at the end of the year,
Every quarter.
Oh,
every
every
quarter,
quarter, that's
right. And so like I said, so this is a tough time for those who have money that they do now on their tax return and that first quarter. And so if you don't have it, just pay your tax bill, make it up on the second quarter. And so then when those quarters roll around, you take your money from that business savings account and you pay your taxes. And if you do that on a religious basis, then you will never be in trouble. But the opposite is just if you never do that, you will always be in trouble.
Right.
Always. So for an example, those real estate agents who make $100,000 or other people and they get these 1099s, those are the ones IRS people say, okay, let's look at this guy, he's made $100,000, let's look at his escrow account, see he's putting money in. No, he hasn't put any money in. We better send these letters because we're going to file his taxes for him if he don't file it himself. Because we know that he owes us money because he's made this kind of money, $100,000. He hasn't put any money away, and more than likely he owes us some money.
And and they know because the broker is sending in
Right.
their tax information
Exactly.
to the IRS.
Right. And on those 1099 forms, over to the right-hand corner, it says this information is being furnished to the IRS. It says it on every 1099. And so it says if you need to file taxes, duly note that not only do you have it, but IRS has the same statement. And so, in fact, they probably get it before you do.
Right.
So,
Oh, okay, here it is. This is what your W-9s look like.
right.
They probably
I
can't
can't
see
it.
that
So
well.
white, yeah.
Okay, and then we have the excluded entity statement form. This is something else.
Yeah,
Okay,
yeah, that was just for
that's
you.
for me.
Yeah.
Okay, very well. Now I have a listener that wants to ask you a question, James. She says, Jeanette says, can you ask James, is there any tax benefit to buying the properties which are vacant lots that were dilapidated houses torn down in distressed neighborhoods? And she says, I have to get an answer later tonight or on this week when she talked to you. Also asked you why certain states, Florida, can survive without taxes that we pay here in Ohio.
Well, let me answer the second question first, and it's very easy because Florida has a place called Disneyland. They are one of the recreational capitals in the world. They also have situated in the place in the United States that was always warm. Unlike us, that we're still waiting for spring because it's like 30 degrees. I saw snow this morning. In Florida right now, it's probably in Miami 60, 70 degrees. And if you notice, the popular seminars, when people do seminars, national seminars, one of the famous places they will do is Florida. Another place is Nevada. Okay.
Southern California.
California. And so, for an example, Nevada is we do have casinos here, but we all know that the capital for casinos is Nevada. And they make such a large sum of money on those industries that they don't need to have state taxes. So Florida's one, Nevada's another. Texas, what's in Texas? The oil industry.
Right.
So they have enough revenue from those industries that they don't have to tax their constituency for state taxes. Now, at some point, if it dries up or
Like in Texas, where things are changing. That's why the oil industry is fighting back, or some states, about green energy, because it will force them to pay taxes. But Florida does have a higher sales tax than we do.
Right.
So they also get it off of that, too.
Now, see, in Alaska, not only do they not pay state taxes, but because of the oil industry and some other things going on,
You get money.
they get money back.
Every citizen of Alaska.
Every citizen in Alaska. So it just depends on the
It's a
state.
check from ExxonMobil.
Right.
Wow, nice.
So it just depends on the state, but that's the reason why there's no state taxes in certain states, because they're getting revenues from other places. Now, if those other revenue generating activities tend to dry up, I am sure they will institute a state tax. So that's just that will happen. So if Mickey Mouse and company left Orlando and a few other industries, well,
That's coming into play, and they are talking about that in Florida, because tourism has been down in the United States, especially in those states that depend on tourism.
right, right.
It's been down 30 some odd %, and largely because of this whole thing about immigration.
Right.
Ah.
So
Oh, boy.
let me answer the other question.
Just saying.
Okay, back to let's stay focused.
Okay. So now, see, here's the
Stay
thing.
focused.
When you're buying real estate, and the thing is this, the bigger picture than taxes is income. And so you don't want to buy something for tax purposes, just for tax purposes. You want to buy something to make money.
Right.
And taxes just will be a part of the consequences of making money. And so with respect to buying land, just to buy land to hold it, and once again, if you are speculating that someone's going to come in and buy that land, for an example, there's a roadway that's now being paved within the inner city to the Cleveland Clinic. Because if you notice, there is no highways around Cleveland Clinic. And so they want to kind of cater to their doctors
Right.
and their hospital. And so they are now putting a highway 490 is going to curve over to Cleveland Clinic. And so,
Really?
yes. So Cleveland Clinic's got a lot of pull. And so now they obviously are going to tear down those houses that are in that way.
And
So
that back road.
in those
yeah.
back roads. So if you kind of had some sensing of that on the planning committee and bought a few houses,
Yep.
just waiting,
Sitting there.
and say, okay, well, I know that the ODOT's going to give me a call because they want to put a highway through here, then that's a great kind of deal.
To
You
buy
know,
a dilapidated house.
The house,
and
like, tear
knock
it down, knock it down,
and
and
they're probably
sit on the lot.
They're probably already sold and gone now because of that.
right.
Yeah.
Just like with Cleveland Clinic, it used to be called South Point when they were expanding
Yes.
on Harvard. There were some houses over there.
Yeah.
And so there were a couple people who knew, and they sat on those houses. And of course, when they buy these houses, they buy them at a premium, and there's no appraisal because they're paying cash. So if the houses were worth maybe $50,000-$60,000, the hospital says we'll pay you $100,000 for each of those houses. And those owners were like, been waiting,
Right.
and they sat on those houses, got the money, and they moved on to someplace else. So if you're buying land for speculation purposes, then that's a good thing. But if you're just buying it for tax purposes, I can write off the property taxes, that's not a good investment to me. So, or if you're going to buy a dilapidated house and you have plans to fix it up,
Right.
and if you do your cost, analysis ahead of time, what's it going to cost me to to buy the house? What's it going to cost me to fix it? And the other thing you need to find out, okay, am I going to keep the house?
Right, or are you gonna sell it?
Am I going to sell it?
Yeah.
And
it's
so,
worth the investment.
is it worth the investment? So you got to sit down with your accountant and say, okay, is this thing worth that? And you also have to sit down with your contractors, because if you're not a contractor, you need someone to go in there to make a fair estimate as to what this thing is going to run you. Because no matter what that cost is going to be, there's probably going to be more costs that you may not even see. You know,
Right.
permits, you know, architectural drawings, you know, just other things that will come along. And so, and do you have the money to do that, or do you have to get a loan to do that? And so, just to buy land that's dilapidated, I wouldn't. If it was me, no, unless I had some other purpose for that. You know,
Right.
if I'm speculating that something else is going to happen, which that land is going to increase in value. So to answer that person's question, so.
All right, thank you very much. Wow, that's so interesting. So,
Yeah, it is.
let's
Learned a
talk.
lot there.
Yeah, it is. Okay, so like for you yourself, even when tax season is over,
Mm-hmm.
because this you have to stay up on top of all the changes. Do you have to take these classes, or how do you get your information?
Classes. I'll be taking a lot of classes. You know, as CPAs and enrolled agents, we are bound by continuing education.
Okay.
And so we have to take classes. And even if they didn't require that, for an example, for us, it's like about 36 hours a year. I probably average at least 50.
Okay.
So I'm way over the limit. And that's never really been an issue for me, because I always want to stay on top of those things.
Right.
But see, here's the thing. What I always tell, especially my business clients, that in order to save the most amount in taxes, it's tax planning. And so tax planning does not begin this month in April when we're trying to file my tax. Tax planning for 2018 started back in January. And it's still not too late to tax plan your year along, so
Okay.
that when the close of the season, you've done some things, you put yourself in certain positions, you've either maybe bought, sold, done some things, so now you can take advantage of the tax laws.
Okay.
And so those are some things that I will be doing. I will be sitting down. In fact, I have a client now who's paying way, way too much in taxes. And so, in fact, I saw something there about entity that I'm going to restructure him so he can save, literally thousands of dollars, because he's paying way too much. He's already on Social Security. And so the money he's paying into Social Security is not going to increase what he's already receiving.
Right.
So that's money he's just throwing away. And so what I'm going to do is just restructure him so he pays, probably like 50% of the Social Security he's paying now. Since it's not going to do him any good,
Right.
why pay it?
Right.
So, and literally he'll save probably any place from $5,000 to $10,000. So I will sit down with some clients and do some tax planning.
This new tax law
Yes.
for small businesses, how advantageous is it for them?
Well, let's put it this way. With respect to the tax system, small business, having your own business, is still one of the greatest tax
Loopholes.
I don't want to say loopholes, but there's a lot of
It's
tax
a
advantages.
benefit.
There's a lot of tax advantages because you can take things that are not normally deductible and make them deductible. Like, say, for an example, your home office or your home. Normally in a home, you normally can write off your interest and your property taxes. There's some ancillary things, like if you bought windows and doors, whatever, and they're energy efficient, you can take, and that's even limited. But now, if you have an office in the home, you can write off your insurance that you normally can't write off. You can write off your utilities, because obviously your home office has to be heated, like with the rest of the house. So part of your gas bill, part of your light bill. If you have a bathroom, so your constituency can use the bathroom.
Right.
Part of your water bill. All that can be written off that you couldn't write off before. If I bought a computer, then, for an example, here's a nice little strategy. I'll give a little tip here. You're in business for yourself. You buy a computer. Okay. Now, let's say you want to write it off in 3 years. And let's say the computer costs you, let's say you bought an Apple, brand new Apple. An Apple may cost you easily $2,500. Okay. And let's say in 3 years you wrote that Apple off, but it's still in great condition. Well, what you can do is, let's say maybe you have a son who needs some money for some things. You say, here, son, I'm going to give you my Apple computer. but guess what? I want to lease it back from you. And so now, you lease that computer. You now pay your son for the leasing of that computer. Now, effectively, you're writing this computer off twice, right? Because you already wrote it off once. Now you're leasing it from your son, and now you get a write-off because instead of paying your son an allowance, you pay him the money for that lease, okay? And so now you can write off the money that you would have paid your son for an allowance as lease payments, and you can write that off. And so now you've written off your equipment more than once, and so
So with the new tax law, you can still do that.
you can still do that.
Do you have to have all that? You have to have that in writing. So
Yeah, but what's a little half
lease
page,
agreement-
little lease agreement saying,
agreement
okay,
written up.
right, little lease agreement says, hey, I will lease from you on a monthly basis, da 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 da, and simple, or obviously another thing you can do is that you can use that same child, and you not only lease his computer, but you can put him to work, put that rascal to work, and have him help you with the business, have you make phone calls, have in terms of organizing. Maybe he's old enough that he can organize your receipts. A lot of our kids are very computer savvy,
Right.
so let him program and maybe put together a website and some other things for you, technology, and pay him to be a designer. And so that money that you would normally pay as an allowance that's not tax deductible is
Right.
a wage, and if he's making under $6,000, it's not taxable to him. You don't have to pay Social Security because if you have an unincorporated business. And so there are things that you can do having your own business that you can't do just being an employee.
So this makes it then you're saying this new tax thing is still advantageous to
Absolutely.
small businessmen and women.
Now there's one deduction which is something I might have to change in my book.
Okay.
Right now, there's at this point it's been thrown out, and I'm thinking that there will be a technical correction. So don't quote me on this, but meals and entertainment is something that small business people have done forever.
Right.
And there was entertaining their new clients, whether it be at a dinner, at a baseball game,
Right.
on the golf course, and at this point, that deduction for meals and entertainment is no longer deductible. And so
Are you thinking they'll bring it back? And also, like if you're like a salesman, you're
Right.
Gas
So
in
is
your
that
car.
for 17 last year?
18.
Or
It's
coming 18. this
18.
year.
Yes. So 17 was still deductible, but just think, businesses that have these lodges in these ballparks where they bring their clients in,
Right.
and they spend these
That's a
lot. They spend a lot of money
Right.
in terms of who they entertain there.
Right. Corporate
Okay.
meetings and things like
Exactly. And so now technically it's not deductible. And so what is incentives to buy those
Right.
lodges? So now if they
That
pull,
would hit on
now
big parks.
they pull the money back, and the owners of the
Ballparks.
Ball-
They're
Ballpark-
going to feel that.
they're going to feel that. So this is going to have a little bit of an avalanche effect. And I kind of think this is going to eventually get back to Washington and say, hey, guys, that was a big mistake. You probably need to change that. So I would say keep your receipts. Just because it's not tax deductible today, I would say keep your receipts because it could be deductible before the year's out.
They
But it was
change
deductible 2017.
Oh,
Right.
absolutely.
It's good for 2017. It's
Yes.
just that you can't do it for
Right,
this
right,
year,
right.
18
Absolutely.
coming.
Exactly.
And they could pull a fast one just like they just did
Exactly.
for this recent
Correction.
Correction. Right.
Now you don't have anything to prove
Exactly.
and still lose.
Right, so that's why I say keep those receipts because if you throw them away and they change it, it's like, man, I threw all those receipts. I don't have.
Yeah,
But
yeah.
Keep them.
Yeah.
It's better to keep them and have them
Right.
and not need them than to need them
And don't
not
have
have
them.
and not have them.
Right.
And so so I said one of the things, like you asked me what I'm going to be doing, I'm kind of keep my eye for these technical corrections,
Right.
so that if something happens, then I'm aware and I can also make sure I disperse that information to my clients. So even though the tax part of tax season, because I still will have probably, it's like, ironically enough, when I was coming here, I was talking to a client who says, James, I'm not going to be ready before the 15th. You just got to file me extension. We're just not going to make it, How about if you come at the end of the month or sometime in May? So I still will have a few people,
Right.
in fact, I've had a client as early as March tell me, not going to make it, file
Not
me
gonna do
extension.
it.
Right. So I still will have several extensions to do. So probably end of April, first part of May, those who have extensions, who want to kind of get them done, I'll probably work on that. And then I will casually try to get into our new tax laws to see how it affects small business and some other things.
Right.
And then once again, maybe call some clients in for do some tax planning and say, hey, based on the new laws, this might help you in this area, or this might hurt you in this area, something that you may not want to do. So, taxes is really a year-around kind of activity, even though the first part of the year you're filing taxes, but there's the rest of the year where you're trying to do tax planning.
There's no vacation from it. Is what he's saying. You never get a break. Okay, so it's better for you to be ahead
Right.
than be behind, because it could be costly or it could be a benefit for you.
Absolutely.
So with that saying, we're going to be having Mr. Oliver. We're going to put together a workshop for small business owners. We'll probably do a series 1 and then we'll do a series 2 for those that are not small business owners, just so that you can get the fundamentals.
Correct.
And get the understanding, and then some questions that you may need to have answered for going forward toward the taxes filing for 2018. So be looking and watching, because we will be making that announcement after he gets a little vacation. Not much, okay, because we got to keep him busy, but also we want to keep you enlightened, because that's what this show is all about, is keeping you up on what's going on. So now, what are some of the benefits for people that are not self-employed?
Well, you say benefits. One of the things that you probably want to do, in fact, I was just...
Or what should they watch, or what is
For
changed?
2018.
For 2018.
Well-
We're not going to give it all to them, because you got to have this. You can't get it all.
But here's what I suggest for those. One of the things that I see, and I'm not sure if people know this, but I heard a statistic that was staggering. They said that less than 50% of the people who are under 50 years old have $10,000 or more saved for retirement, which is a staggering statistic. So if I'm 50 years old and I only got $10,000 saved for retirement, and I'm thinking about retiring at 65, 62, I need to do some.
Retire.
Either you can't retire or you're gonna. Well, I did have one client that was very, very, and obviously the names will be not said to protect the innocent, who already knows that he has limited funds. He says, I'm going to enjoy myself for the next 3 or 4 years, and then I don't know what I'm going to do. He says, I'll just be a hermit, because he's just he has a certain amount of money, and he's spending it down, and he says, when he'll have a little bit of Social Security. I mean, when I say a little bit of Social Security, and I said, well, what do you plan to do? He says, I don't know, but I'm going to enjoy myself for these 3 or 4 years. I would think that most of us don't want to have that posture, that you want to have enough money that you don't run out of money before you run out of time. And so one of the things that you want to do, if you are a part of a 401k program, if you're in private industry, or you're with the hospitals, or with the schools with the 403 plans, or if you're government workers with the 457 deferred comp plan, that you want to put money away for your retirement. And even though some of those plans have a retirement in place, because remember, in private industry, most private companies don't have a pension. Fortunately, if you are a teacher or a hospital worker or a government employee, they still have pensions. But even those who have pensions, no one pays 100% of what you make for retirement.
Okay.
And so my question is, if you are, whatever you're making right now, and if you're struggling with what you're making at 100%, well, what are you going to do when you're only making 60% of that money for your retirement? So you need to supplement that retirement with putting money in your 401k.
Okay.
And so that way you'll have monies that you can add to your pension, assuming you have one, along with Social Security, because the more sources you have in terms of retirement sources, the better off you'll be.
Right.
Even in the Bible says you want to have 7 or 8 different streams of income, because you'll never know which one will stop.
Right.
And so the more you have, the more you plan for. Once again, that's that word again, plan.
Planning is so important.
Planning is very, very important.
Do you ever think anything would happen to the Social Security system where there wouldn't be any money to get for Social Security? Or will it dwindle down?
It's not dwindling down. I think
there was maybe call it fake news or whatever.
Well, it's
but,
all that's
they
been
say,
the
well,
fake news since the '80s with Ronald Reagan. He's the one who brought that all the time about Social Security running out of money, about the welfare queen. The point of fact, the Chinese are not the majority owner of our debt. It's us, Americans. Social Security. It's the American government that borrows from Social Security and never pays it back.
The other thing is this: is that
The money's there. It always will. Clinton's a proof of that.
right? It will always be there. Now, if they want to start funding it, one of the things they can do, a very simple solution. Right now, I'm not sure if you know this, but there's a limit as to how much those who pay Social Security. I think it's this year it's like $127,000. So if you make more than $127,000, so for those higher income bracket people, everything over $127,000 they don't pay Social Security on.
Right.
Okay. An easy solution is they make just like with Medicare, is taxable on all your income.
Right.
So all those CEOs, all those big fat cats, if they made Social Security taxable on all their income, you would have literally millions of dollars.
Billions
going
and trillions. But if you look at the numbers, actually there's trillions of dollars that go into it. But again, it's Congress that borrows the money, gives an IOU, never pays it back. The only president who actually did that was Clinton. That's why it was over $2 trillion surplus, which George Bush Jr.
spent it right back. Borrowed right back.
And that was just in 8 years that the
Interesting.
United States government did not borrow from Social Security and had a $2 trillion overhead. When they walked in the door with Clinton, it was supposed to have been a deficit, $1 trillion deficit. So he left office paying for the deficit, $1 trillion deficit in Social Security, and added
Right.
simply for not borrowing from it.
Right.
So if people worry about Social Security running out of money, get on your congressman, get on your senator, and have them make a law saying can't borrow from Social Security ever.
Or another way you can do it is to tell our congressional people, our House of Representatives and our senators, we want you to be on the same Social Security plan
That we
we're
are,
on.
because they're not.
Right, they're not.
Okay.
And guess what? It guarantee you it will be fixed less than
a year.
Yeah.
They'll come out a law saying can't use Social Security as a general fund because
Right.
that's what the government uses it as.
Right. So that
So
would
they
be.
need to get a petition started
Oh yeah.
and put this on out there to be voted on.
Yeah. The only scary thing, they keep on throwing you in the
People
face
won't
like
do
China
that.
owns our debt. It's
Folks
us
won't
who
do
own our
that.
debt the
People won't
most.
do that.
Well, because our Congress people are thinking that the herd mentality.
Don't know.
They don't know. They don't know, and because some people was wondering if they were on Social Security, and they said, "Yeah, we're on Social Security just like you are," but they didn't tell you that we're on a different Social Security system than you are,
They are,
and
which
so
they are.
right, and so and because the masses don't know that, they're thinking, "Oh, well, they'll fix it because they're on." No,
They have no incentive
So
to do
what
that.
is this? They're on Social Security with benefits?
Yeah. Their Social Security is way different. It's more like a pension.
right,
Even if you just did one stint in Congress, you will get free. You and your family will have free medical care for the rest of their lives.
yep,
On top of that, your pension is pretty much for the rest of your life, and your wife can get your pension if you happen to pass before her. So it's like the railroad. It's built on that the old railroad pension system, which is probably the best pension system ever, and it was the role model for Social Security as well.
right. The railroad pension or system was the Social Security was supposed to mirror the railroad
railroad
system,
pension.
and it kind of veered off in a different direction.
It sure did.
Right. So yeah,
Okay.
and unfortunately, because it didn't stay on that, but as
Still a good system.
oh yeah, excellent system. And as he was saying, that we have with Congress, if you think about this, if you spend one term as vice president, one term as president, you got a pension for the rest of your life. So needless to say, someone like a George Bush Sr., who was vice president under Reagan twice and president himself, he has collected, and every time he stays there, his pension gets bigger and
Bigger
bigger.
and bigger.
But he only needs
Bigger
one
and
4-year
bigger
term.
and
Now,
bigger
how
and
else can you
bigger.
work 4 years and have a pension for the rest of your life, and your wife's and your spouse's life?
Interesting.
And free medical care
Free medical care.
for you and your family.
Interesting.
And so
Congress,
that's
here I come.
Yeah, I gotta give you one of them then. I'm available.
That's what some of them don't mind if they lose the afterwards. I mean, they do one stint and they lose, they don't mind because think about it.
He's going to get that after the term is over.
Absolutely.
Oh my. I've
Absolutely.
been in the wrong field all this time. Dear. Okay, like I said, I'm available.
And a lot of those extra perks were, voted in by your Republican congressman. Not
I'm
saying
looking
anything.
to retire.
Right now, see, here's another thing that people don't realize. Another small perk that they get because people ask me all the time.
They get
You know,
all the small
James, I'm a lawyer and I wear my suit down to in front of the judge. Can I take that off? Can I write that off? The answer is no. It has to be a uniform that you can write off. And actually, at this point, your uniforms won't be able to be written off after this new tax law that 45 is put in place. But one of the reasons why Congress has never put that in place is because they get an allowance, a clothing allowance.
Uniform.
So
They got it made.
yeah, so they have. So why are they worried about your clothes when they already got a clothing allowance that they get every
See,
year?